best in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And as usual, it's the Financial Survival Network, and I'm Kerry Lutz. And so today, big FOMC meeting. Everything is fine. Don't worry about it. Fed's got everything under control. Just keep the party going. Keep putting your money into the stock market. You have nothing to worry about. So, and you know what? In Florida here, record 9th consecutive year without a hurricane making landfall. So the question is, no hurricane in Florida for 9 years, no collapse in the financial system now. We're going on almost 8 years. So do you give up your flood insurance? Do you give up your emergency preparedness supplies? Do you give up gold and silver? And that's the question that I'm posing to person you're about to hear from. You're very familiar with him, Dennis Miller, millersmoney.com, one of the most popular and helpful, useful sites on the internet. Dennis, I'm really happy you've decided to come back so quickly.
Well, Kerry, thanks for having me. I appreciate the nice introduction. I hope I can live up to it. But thanks for having me. I always enjoy it.
Hey, well, it's one of those things. I'm afraid that the longer a hurricane doesn't hit Florida, the more likely it becomes that one is going to hit it. And, the more calm the financial markets are, the more likely something bad's going to happen, right?
Yeah. Look, Kerry, I wrote an article about that where I talked about the record number of days and how it was blared on all of our TV networks here in Florida. And as a joke, I went over to my neighbor and I said, I think hurricanes are obsolete. I'm going to sell my generator, sell my emergency supplies, get rid of all this stuff. We haven't had a hurricane in 9 years. Look at the trend. And he looked at me. He wasn't sure. He said, "Are you crazy?" And then he said, "Don't come over here. Don't come mooching on me when it happens, because it's every man for himself." And I told him that I was kidding. Mm-hmm. But, it's the same concept with the metals market today. You look at the trend line and you see the direction of the trend. Well, it's complemented today with what the Federal Reserve said. They're saying happy days are here again, not to worry, okay? And the concept is the same. The biggest problem they had with 9 years without a hurricane was people were going to become complacent. Well, it's the same thing with our economy. We keep getting this illusion that our economy is under control, happy days are here again. We're going to get complacent, and instead of Hurricane Danny, which I wrote out years ago at 75 miles an hour, we're going to get a Katrina, and a lot of people aren't going to be prepared for it. And can I talk a little bit about the Fed's announcement today?
Yeah, please.
Just to put it in perspective, the announcement that I read said, the jobs numbers are back down now where our target was. Everything's under control. Happy days are here again. Okay? Mm-hmm. Now, of course, it's just a mere coincidence that the election is less than a week away. I mean, there would never be any political motivation behind their announcement today. We all know that. And that was meant to be sarcastic. But I'll give you one stat about the employment numbers. I wrote this into an article recently. One of these economists dug into the numbers, and I'm doing this from memory. I might be off a couple, but the point will be right. They said they created something like 275,000 new jobs, and they were all excited. They took it down under 6%. Well, he goes into the detail, which they never talk about. The age group 55 to 79 increased their number of jobs by 285,000, and the 25 to 55 age group lost 10,000 jobs. So all those jobs that were created, as the article said, are for grandma and grandpa because they're trying to make ends meet at the expense of the younger generation who can't find a job. Now, Kerry, if that is a signal of a good economy, then I've lost everything that I've studied for the last 70 years. The conditions are still as ripe for the economy to turn as it is for a hurricane to spawn. Until there's no longer hot seas and trade winds and that sort of thing, we're going to have a hurricane sooner or later. And it's the same thing with the economy. The numbers are bogus, and I just have this great fear that a lot of people are going to be blindsided because they're buying onto it.
Mm-hmm. And then you just have to look at Europe and Asia and all the threats that the country's facing in the Middle East. And, it just, the story is not an encouraging one. And then you have to doubt the efficacy, Dennis, of those job numbers as well, because the real number that matters is the labor participation number. That one is abysmal. And the number of people on disability, I could go down the list, but the numbers better than I do.
Yeah, and that's the point. As a matter of fact, I watched an interview with Dr. Lacey Hunt, who is one of the revered economists that I really put on a pedestal. And he was interviewed by Santelli. And Santelli just says it flat out. He said, do you think the Fed will raise interest rates in 2015? And he just looked at him and said, no. I mean, I don't have the exact number, but I think it is like 1% increase in the interest rates costs our government, hundreds of billions of dollars in additional interest. And with the budget being what it is, they're trying to keep those interest costs down to the government so they can use the money for other things. So the fact is, to me, we still have to be diligent. We still have to take the precautions. We can't allow ourselves to become complacent.
Yeah. Yep. So you're treating precious metals mainly as an insurance policy, right?
Well, I wrote the book Retirement Reboot, and in that book we started with our core holdings, which is the foundation. And part of that is the foundation for a catastrophic event, just like we have our emergency supplies for hurricanes. I have a generator and all the food and all that stuff. Well, we have to do the same thing if we have a financial catastrophe. Now, in my Miller's Money Forever newsletter, I've been asked about what we should do because the current gold prices, of course, are taking a hit. And here's what I'm telling my subscribers. I think we have to look at gold serving two purposes. One purpose is our core holdings that are going to be protecting us when the inevitable hyperinflation comes and hits. Will a hurricane come in 2 years, 3 years, 5 years? I don't know, but it's going to hit. And therefore, everybody should have somewhere between 10 and 20% of their net worth in core holdings. Now, that isn't all metals. You may have a family farm or other things. So I'm telling my subscribers, if you're still in that build-up process, like a lot of baby boomers are, where you're trying to build your core holdings to your comfort level, now's a good time to buy because these are as good a prices as we're going to see for a while. On the other side of the coin, if your core holdings are already at your comfort level, then I'm not so sure I'd be inclined to go buying any more for that base survival package. Now, at the same time, while money earmarked for retirement generally doesn't go into speculative things, everybody generally will have a little sliver in their portfolio where they are making investments with the intention of buying that asset for yield and appreciation that they're going to sell down the road at a profit. Okay? Now, for retirement money, I'm saying I'm not so sure we would be in junior gold mining stocks at this point. And the reason I say that is the success or failure of a junior gold mining stock many times depends on are they going to run out of money before they complete the job. And in today's environment, that's a risk I'm telling our subscribers to be very leery of. Mm-hmm. But at the same time, there's our investments that you can make in gold and silver and platinum and palladium that's on sale right now that do offer some profit opportunities and good profit opportunities down the road. Just make sure you don't go overweight in that speculative portion of your portfolio. I've got 3 or 4 of them that I'm really high on right now. If people have room left to buy more in speculation, that I'm pretty high on.
Yeah, but just keep it to a manageable portion. Don't go crazy over them, because sometimes things are cheap because they should be cheap. And, just keep it in perspective, right?
Yeah, absolutely. Absolutely. As a matter of fact, let me share with you where my head is on that. At this point today, I'm not sure I'd tell anybody to go buy a mining stock. I would also not tell them, you have those exchange-traded funds. I think it's GLD and SLV.
Yeah.
Now, I'm not comfortable with those because I don't know that investment is backed by gold. You see these reports all the time about gold and silver moving it out of the warehouse. There are 3 funds in Canada that I own right now, and those are the Sprott funds. I believe the symbol PSLV for silver, PHYS for gold, and SPPP, which is the platinum and palladium. Now, they are not like GLD and SLV. They take a certain amount of metal, and I believe it's in the Royal Bank of Canada. You might know, but it's in one of those super-duper safe places. And then they take the price of that metal, and they only have X number of shares. Mm-hmm. And therefore, when you buy a share, you're owning a piece of that block of metal. Now, the share price may go up or down based on the price of the metal, but also it may go up a little bit higher if people think that they're going to rise. The last time I did a study on it, the price of gold and silver, and this is before it took its radical drop, you were paying about a 20% premium to buy the share of the fund versus the actual metal that was in the bank. Well, tell me, Kerry, if I could say I'm going to invest in something today that's 80% backed by gold, if that's still not pretty doggone safe, now it's back down to probably much closer to parity. So if somebody has room in their speculation side and wants to take a good long look at maybe how they can invest and take advantage of that when the inflation hits and the gold comes, those exchange-traded funds are something I'd encourage them to take a look at. Again, don't go overboard. You're not trying to hit a 5-run home run. Yeah. Speculation has got to be kept to a minimum.
And with risk always being managed, not ignored.
Yeah. Well, the other question, let me interview the interviewer. I got to ask this question. I got to ask this question by my neighbor, and I asked him the same question. Kerry, you selling any of your metals?
No, I mean, because that's not the purpose of it. So
no, and neither am I. And it's for that same reason. The fundamental cause of why we own metals has not changed.
Yeah.
Or the premise, rather, would probably be a better word.
Yeah, I think if anything, it's more now than ever because, the same people are running the banks, the same people are running the Federal Reserve, and the irresponsible behavior, I'm not going to say whether it's criminal or not, because that's for the authorities to consider. Let's just say it's irresponsible and immoral. it's still going on, and it's worse than ever here, Dennis. It really is worse than ever. And there is no protection for you considered, or, you don't come into the mix whatsoever here. And
eventually, Kerry, that's going to blow. I see something else on the horizon, too. I talked to a guy I have a great deal of respect for in Switzerland this morning that's in the financial services industry. And, the Swiss are one of the few people that still have their heads screwed on straight. And they are actually the Swiss followed Nixon and let their currency float. It was no longer backed by gold. And they now have a referendum that will mandate the central bank to have 20% gold backing behind their currency, okay? And it all has to be stored in Switzerland. Now, that's being put as a referendum to the voters. And I was told this morning the first poll that they've seen, and I should have written the numbers down, but it was like 44% say yes, it should pass, 40% say no, and there's a whole bunch of undecided. Well, Kerry, that's going to get really interesting if they have to bring that goal back and bring their reserves back up to 20%, buying back a lot of that gold that they sold. Yeah, Kerry, that's going to make it very hard for anybody to manipulate the market, because with the Russians buying gold hand over fist, the Chinese are buying gold hand over fist, the Indians are buying it, you got a new gold exchange that's opening up. And if that referendum passes, then the Swiss are going to have to bring their gold, buy enough of their gold back to bring it up to 20%. I really find it hard to believe that anybody's going to be capable of manipulating that market very long. They're going to take a tremendous bath if they try.
Yeah, it's really interesting. My gut feel on this, Dennis, is that by hook or by crook, they will defeat that referendum, just like they did on that other referendum, the succession of Scotland from the UK. They'll do whatever they have to defeat it. But on the offhand that I'm wrong, and I've had my share of wrong calls over the years. On the offhand that I am wrong, that will throw all the markets, the entire world markets, into complete and utter chaos, like instantly, and would cause, initially I think the powers that be would keep the lid on precious metals and shrug it off. But over a period of a couple of months, it would pretty much, I think it would do a number on the markets, and you'd see some major volatility return to precious metals. And, that would kind of be the beginning of the end of whatever has been going on in precious metals for the past 3 months, for sure.
Yeah, Kerry, I'm not handicapping that election at all. I do have a great deal of respect for the Swiss business people that we work with at Casey Research, and I believe that the Swiss people, particularly with all those people that are employed in the financial services industry, their population as a whole gets it a lot better than we do in the U.S. As a kind of a cute aside, I asked him, because the government is the one that is really blasting vote no, vote no, vote no.
Yes. Because
that means it would control their irresponsible spending. And I said, every time the government goes out and blasts this message, does it show that more people become in favor of the referendum? And he said, well, yeah, it actually is. So they don't trust their government any more than a lot of other people in the world. I thought that was interesting.
Yeah, and we are in, Dennis, a phase right now of history where most do not trust their governments, and really have lost confidence in their leaders' ability to govern and to manage this incredible rate of change that's taking place at every level of society, whether it's technological, social, you name it.
Well, and that's part of our challenge because, Kerry, you're in the financial services industry, and you're talking to people who have the financial kind of brain and dealing with it. And, it's very hard to be successful as an investor financially, even if you're getting good data. But, this is a week before the election. At the last presidential election, they readily admitted withholding bad news before the election. They held it until 2 weeks after their normal release date. So, I think most of the people that are in our industry look at those numbers, and it's like Lacey Hunt said today. No, they can't do it. Here's going to be the adverse consequences if they do. So, I don't know that we're going to necessarily change the government, but we just have to change our weighting of using these Bureau of Labor Statistics numbers and how they factor into our investment decision. We have to go beyond the headlines and pull up the stuff like I told you about the true unemployment statistics. And we've got to go behind the headlines to get the real data so that we can make intelligent recommendations to our clients.
Mm-hmm. Yeah, I could not agree with you more. Now more than ever, you really need to take responsibility for what's going on here and know that the risks are greater than ever, and that if you just have to really, really just know that you have to be more suspicious than ever of the information that you get and really put it to the test. And,
if I could leave your listeners with a couple things, it would be this.
Sure.
Regardless of the message we heard today from the Federal Reserve, don't allow yourself to become complacent. Look around. Look at the price of food. Look at all the things that we're spending. And tell me if you think inflation is 1.7%, like we're getting in Social Security. So don't become complacent with that, because what we're seeing and what we intuitively know is going on versus what we're hearing in the mainstream media isn't necessarily driving. And I think a lot of them are trying to make people think that things are good, and it's an illusion. And he who buys that illusion could get hurt financially. And the other thing I was going to mention, Kerry, before we end it is, as always, I want to make sure that I extend the free book offer to your listeners. I want to make sure that they know they can get a copy of that book that I talked about. We have this arrangement with Kerry where I don't know exactly how you do it, but they can go onto a website and download a free copy of the book.
Yeah, we just have the link up in the show notes to this interview, and just click it. You'll get it for free, and it's well worth the click.
Yeah, it's millersmoney.com/free book. At this particular point, my mission in life at 74 years old is to help keep my peer group enjoying their retirement as opposed to having to constantly worry about money. It's just doesn't make for a happy retirement if you're sitting there laying awake at night worrying.
Yeah, so important. Avoid the minefields out there, and just stay the course and enjoy life. Because that's what retirement's supposed to be about. And keep a steady plan, responsible plan for retirement, and just keep your insurance intact. Just because something hasn't happened yet for a long time doesn't mean that it won't. And I'll leave it on that.
Yeah, I'm with you. It's, inevitable and imminent don't always match. but inevitable normally wins.
Yeah.
And you can't print up $4 trillion and have rampant government spending in dilution of the currency without eventually ending up with some significant inflation. And those people who bought and held on to their gold and gritted their teeth through the trough times are going to be well rewarded when that day eventually gets here.
Absolutely. On that note, Dennis, we'll let you go. Just go over to financialsurvivalnetwork.com, click that link, millersmoney.com/free book. Get that book. It's well worth reading, and never give up your insurance.
Well, you got that right. Thanks for having me, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.